Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and we are here to understand the global factors, domestic factors, as well as what's happening with several currency pairs. So first, talking about the flows with respect to the INR, we have seen the FPI flows for equity to be very, very huge, to the tune of almost around 30,000 crores of inflows for the month of September itself till date. If we talk about the debt flows, they have been a pretty, we can say, flattish to around 136 crores. As I said, the equity flows have been amazing. We have seen Nifty hitting all-time highs as well. If we talk about the FX reserves, we are at all-time highs of around $689 billion, having NFKT of around 12 months import cover, and also trying to cover the external dollar debt. So RBI has been doing a fantastic job when it comes to the FX reserve built up. If we talk about the global factors, we have seen a surprise by the Fed, though the market was anticipating a 50 basis point cut, but still there were majority of them expecting a quarter basis point. So we saw a 50 basis point rate cut. In fact, the global forecast of the growth has also been revised downwards towards 2% from 2.1% for 2024. Also, if we talk about the median estimates, still goes for further rate cuts for the year 2024, at least by 75 basis more to go from here on, which is again a bit more, on the side of a bit aggressive rate cuts. So now, what is the immediate reaction? We saw an immediate reaction of dollar index moving towards 100.21 and then obviously bouncing back towards 101.30 plus levels. The 10-year US Treasury yields again bounced back towards 3.72, 3.73 levels, and the Brent crude prices were pretty flattish, consolidating around $73 per barrel. But gold had tried testing $2,600, though it tried touching there and reversed back towards 2,550 odd levels. So the reaction was seen, or even global markets, if we talk about a risk on or the equity markets, they were positive. If we talk about the Indian markets, they started well, but I think again, as I said, some consolidation or some sanity is coming into the market where these risk on rallies are starting to reverse to some extent. We have seen dollar rupee pair, seen in a consolidation phase, but we saw some appreciation in rupee in the last couple of sessions, near testing 83.60 levels. So what's we understand here is 83 half acts as an immediate support zone, though the rally started from 83.40 towards this 84 big figure journey. So 83.40, 83.50 zone acts as a very important support level to watch out. While I think on the right side now, 84 big figure remains distant story where we are not eyeing, or we were also not eyeing it to cross, but there were a couple of cases in NDF where we have seen those levels being above 84 also. So for now, I think 83.40 to 83.90-95 zone continues to be this broader play for dollar rupee pair. For other economies like Bank of Japan, we have policy this week where we are not eyeing any kind of rate hike from their side, though there is one hike still anticipated for the year. And if we talk about Bank of England, I think it still should remain status quo for this policy at 5%. All in all, for dollar rupee, as we discussed, 83.40 to 83.90-95 remains a broader range play. So that's all from my side, friends. Thank you so much for your time and wishing you a very good week ahead. Thank you.